Hey, good evening, traders. This is Jeff from zentrader.ca, and I've got some charts here. Hopefully, we can try to figure out which way this market's heading. Right now, we've got a 60-minute chart here, and it looks like this is going to be the trend line that we're going to be following for right now. This is the only thing that we really have to go on. The things that I'm seeing in the markets are there's a lot of things that suggest that there's more downside. I would say that it's like an 80-20%, 20% that maybe we have found the bottom and that the markets are gonna slowly try to recover, but I don't think that's the case. I'm not really seeing anything that supports that, except for the fact that nobody really knows where the market's going, so you always have to prepare for the trade that goes against what the charts are telling you, because that happens all the time. But the markets are very weak here, and you can see this by just simply looking at the RSI, how we've really channeled between the 20 and the 60 area, never really making it. Even after we broke down here, we haven't even been able to make it back to the 60 area. So that's very weak market activity. And then here on the daily NASDAQ, the negative DI line, as long as it stays above an up trending ADX line, the markets are extremely negative. When it crosses, that's like one little clue that the market could be getting to reverse, but yet it could still, the markets can still continue going down for a long time. Much like, well, I'm not going to get into that, but just all you've got to know is, as long as this negative DI line is above the ADX, that's very bearish for the markets. And you can see that too in the Keltner channel activity, how we're really hovering around that lower Keltner channel, and we're all below that middle. The Dow didn't even make it quite up, but you could say that this is going to be the first step of resistance as these markets try to find some footing. The VIX here on the 60-minute chart, this is textbook bullish behavior. It's finding support here. It's trending between the 40 and the 80 line. Textbook, again, bullish behavior, which is what you want to see. You want to see that VIX confirming what the NASDAQ is doing. I was looking at this chart, and this candle could be reminiscent of, say, like this candle, in terms of we could still see more downside. It's easy to look at this candle and be like, okay, looks like the bears won because it finished so well off its highs. But the VIX is so volatile, and it only takes 1 or 2 days for that volatility to disappear and give the appearance that the bulls are trying to get back in charge. But I don't think that that's quite the case. I mean, if you look at the correction so far, it's been fairly tame, given everything that's going on in the world. I really find it hard to believe that we're going to get out of this without more downside. Here you've got the advanced decline volume index, and you can see that I noted this coiling of the positive and negative DIs, and how whichever way it broke was probably going to be the next trend. And if you go back here and you look at this one, you see how it broke, the positive DI broke to the upside, and it had a lot more to go. So we could just be in the beginning stages. So this period of this negative DI breakout is very reminiscent of this, and maybe the markets move higher for another day or two, and this pulls back and tests, say, this support area, and then we springboard higher with more selling. One possibility. And then the other thing is, here's the SPX, and you can see how we broke down through this diamond pattern, and it almost looks as if the 50-day moving average is starting to roll over, which would be a first since September of this year. So this 50-day moving average could be resistance on the SPX as well. So take care, traders.